For more exclusive content from CNBC Crypto Trader, hit the subscribe button now.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Shots fired as Nouriel takes on the crypto community, this time in Congress. Fidelity goes all in on crypto. Tether sends shockwaves down the crypto market. Bitfinex changes bankers again. Qtum partners with Amazon Web Services, and 0x becomes the first ERC20 token to be listed on Coinbase. Those are this week's headlines. I'm Crypto Man Run, and tonight, like every other night, here at CNBC, we're all in on crypto. So stay tuned or hit that subscribe button now. Fidelity, the world's third largest asset manager, housing 13,000 clients and managing over $7 trillion worth of assets, announced this week that it would be going, quote, all in on crypto. The group announced this week that it would be launching a new subsidiary called Fidelity Digital Assets to execute on a three-pronged crypto strategy. First, they would launch an institutional-grade custody solution. Then they would launch a trading execution service using smart contract technology. And lastly, they would launch a 24/7 crypto advisory service to educate their clients. This move has been hailed by the investor community as the biggest move for crypto since institutional investors got in. It's the first time that one of the big names in institutional investing is actually coming into crypto with a formal plan. Right now, the launch is planned for sometime in 2019 with no actual date being set. Fidelity's move comes just 2 or 3 weeks after the Yale Endowment announced that it was making some investments in the digital asset space. And just after Fidelity published the results of their global investor survey, which found that, quote, 70% of institutional investors said that a new asset class would emerge because of advancing technologies such as the blockchain. Also, the same report went on to say that institutional investors such as hedge funds, family offices, and market intermediaries look into the market for a number of reasons. Whether it's the rising popularity of a store of value or the relative non-correlation to the broader market, the potential to power low-cost global payments, or the emergence of protocols that could power new industries. And on that note, former wrestler and now billionaire Mike Novogratz jumped into the ring, as he does so well, and announced that his firm, Galaxy Digital, would be Fidelity's first custodian client. He said in a statement this week that the partnership between Galaxy and Fidelity would encourage institutional investment into the asset class. Joining me tonight, I have John Nigerian from the CNBC studio in New Jersey. I've got Yaniv Feldman from Tel Aviv, and I've got William Peets from Passport Capital in San Francisco. Gentlemen, good evening. John, I'm starting with you. We got news this week that Fidelity is all in on crypto. How big is this news?
I think it's huge. Obviously, you and I talked in Miami about BACT, which of course is the NYSE's version of something like this. But for Fidelity to do it and for them to talk about custody as well, that's pretty big, Rand. So obviously the first step for them, they're going to do institutions. But when they start moving in and they can offer that to the $7 trillion in assets that Fidelity has, that's the second or third step. I think it'll be huge for crypto.
Now, John, is this the biggest news that crypto's heard this year?
It is. For me, it is. We're lucky to be in a news cycle right now where crypto, even though it hasn't reacted and screamed to the upside like it was at the beginning of this year when Stevie Cohen got involved, ran. People really liked that. And obviously we saw a pretty good pop out of cryptos. But now we've got big news like, for instance, Yale University getting involved in the crypto space, putting money with a former Pantera guy and with Andreessen Horowitz. And it barely even lifted cryptos at all. But I think this is much bigger news than an endowment like Yale getting involved, which is good news. I think this is bigger news.
John, you're a trading man. As a trader, why is this move not actually moving the market?
It seems that again, you and I have had discussions about big buyers, iceberg buyers that are supposedly out there willing to buy 100,000, 200,000 coins. But there aren't that many big sellers in the markets right now. So the buyers are trying to be patient, trying to see, if they can continue to nibble away at about, in Bitcoin, let's say between 6,200 and 6,700. They don't want to spook the market and come all in. And meanwhile, the sellers seem to be pretty patient also. So I think it's kind of a Russian standoff right now. They're not sure that either side wants to show their hand too much. So they're both just kind of collecting little bits rather than big blocks.
John, for institutions to get into crypto, you need a custodian solution, but you also need a stable coin that will act as a bridge from the traditional financial world into the crypto world. Do you think that rumors of the collapse of Tether had anything to do with the markets not moving this week?
Yes, I do. Because, again, just like backed from the New York Stock Exchange, ICE, this isn't something that's here already. Meanwhile, Tether is something that is here and allegedly has billions and billions of dollars in it. And the question is, of course, how much of that is backing it up rather than people that have, more or less exited some of those cryptos and gone into this stable coin in the case of Tether. I think overall, though, the fact that the New York Stock Exchange says Bakkt is going to be here in November and Fidelity is moving very quickly as well, I think that ultimately will be a bigger positive than the Tether negative. But unfortunately, like you say, it's probably being outweighed because the other offerings are out in the future rather than being here now.
Yaniv Feldman, over to you. Is this the biggest news of the year?
Absolutely. I think, Fidelity coming into crypto is probably the biggest story of the year, if not, ever in terms of crypto institutionalization. We had, just in the last 3 months alone, we had ICE with BIBIT. We had Citigroup doing digital asset receipts. We had TD Ameritrade, investing in RSX, a crypto exchange. But Fidelity being the third largest asset management company in the world with $7.2 trillion assets under management is definitely, the big institution that everyone has been waiting for. And it's not, just investing in something or pulling in a joint venture. It's actually creating a subsidiary completely focused on providing digital asset services.
Yaniv, unlike the previous news that we got from Yale, where they said they were investing in crypto, Fidelity said they're going all in. Why is this news different?
So first off, specifically Yale, they invested in a fund that invests in crypto. That's like a second level. This one is where high net worth institution going way in to crypto and directly in. They're going to actually provide services starting from custodial for institution going into crypto, all the way through exchange services, high brokerage exchange services, execution services, where they're going to execute trade orders for institutions across multiple exchanges. And on top of all of that, they're going to provide multi-tier advisory and support services for institutions going into the game, meaning that institutions, family offices, all Fidelity's, biggest customers now trying to find their way into crypto are going to get, on-hand training and advisory services directly from Fidelity, which is basically the entire tool set an institution would need to get into the game.
So Yaniv, what does this mean for crypto? And then why isn't this managing to move the markets?
So, I've said it before and I'll say it again, in a bear market, even good news tend to not really move the needle, and we're still in a bear market. And considering the fact that Fidelity is going to come into play just in 2019, the announcement is one thing, and seeing it happen, in real life is another. But we will see, starting from November, when BIBIT is going to come into play, early 2019, RSX is going to come into play, and first half, second half 2019, when Fidelity goes into play, we'll definitely see the actual money starting to flow in, not just the rumors money, but the actual institutions waiting to have someone to serve them so they can put money in the market.
Now, Yaniv, the announcement said that their decision was to launch an institutional-grade custodian solution first. Out of all the entry points they could have picked, why does this have any relevance?
So right now, a lot of traditional financial institutions who went on and explored crypto assets, as an investment opportunity, discovered that managing, holding, maintaining crypto asset, private keys, public keys, and everything all together is not something that they're used to or understand. That's on the one hand. And on the other hand, regulatory requirements are still not there yet. If you're looking at the way traditional finance works, usually fiat money or other types of assets are being held at custodians. And there wasn't really a thing as a regulated, trusted custodian with crypto. There isn't one yet, but Fidelity going into play is definitely someone you can trust doing that for you.
So do you think that this was a big barrier to big asset managers entering the market? I mean, before we had custodian solutions, but they came from players like Coinbase, BitGo, and even First, your company. Do you think that now that we have a big name like Fidelity, that this is actually a game changer?
I would compare it, if Google would have come and offered, a new technological service, let's say a self-driving car. Or if, Google's not a good example of that, but if BMW would come out with a self-driving car, or if Faraday Future, a company you've never heard of, comes out with a self-driving car, who would you have trusted?
Well, I'm looking at you as a big institutional investor at Passport Capital. I know that you guys are one of the bigger funds to have already entered crypto. How big is this news?
I think it's very big long term. I think it's one of many kind of positive macro catalysts we see in the space right now. In particular, they have a tremendous amount of assets under custody. I read it's around over 7 trillion in assets on the custody side. Clearly, they have a lot of institutional and retail clients, and so I think this provides a great on-ramp for institutions and later on retail into the space. I think it's important also because it pushes the narrative with regulators. It's going to force the SEC and eventually Congress to take a closer look at this space, and I think that's important as well. I think it's really big. There's nothing. I think I read that they're going to officially onboard or become live in early 19. So it's another one of these announcements without anything behind it immediately, and you didn't really see any price reaction, and I think that's fair. But again, one of many macro catalysts that will be strong for 2019.
So do you think that now the chicken has made a statement and the egg must follow? Do you think that this announcement will force the regulators to be under pressure and actually come out and say something?
Yeah, no, I think it has to. I mean, there's several developments like this. You saw BACT, right, coming out, which is essentially a byproduct or funded by ICE, that is the parent company for the NYSE. You have groups like T0 who now own an option exchange in Boston. So there's lots of different areas where you're seeing, a move by more traditional institutions, which will force, again, regulators' hands. So I think it's great. I also think, the nice part about Fidelity amongst these other groups is that they have both a traditional background, but they've also hired people with kind of crypto native expertise, if you will. And so, again, I think that allows them to provide a very informed opinion, which can then help guide, hopefully, regulators in the right direction. So
now, as an institutional investor, I feel almost compelled to ask you. One day after Fidelity announced that they were entering crypto, BlackRock, the same institution whose CEO came out earlier this year against crypto, announced that they were also exploring the digital asset world. I guess the question I have to ask you is there such thing as institutional FOMO?
Not necessarily FOMO, but I do think, and there's a precedent for this, that every bank, whether they're talking about it or not, are spending time in this space, and they're thinking about custody, they're thinking about how they're going to enter the space when it starts to mature. The reality is it's only about a $200 billion market right now, which is peanuts relative to all the other traditional asset classes. But that said, whether they're talking about it or not, again, this is Morgan, Goldman, down the whole line, like they're all paying attention to it and they're dedicating resources to tracking it. And so, I'm not sure the depth of BlackRock's comments. It might be just an opportunity to, get some headlines and some free promotion on and draft Fidelity. But it doesn't surprise me that they are looking into this more closely than they might have previously disclosed. And you're seeing that across all these larger financial institutions. So
okay, so work with me here. We've had the Fidelity announcement, we've had the BACT announcement, we had the TD Ameritrade announcement, and even Passport Capital announcement that you're all coming into crypto. Yet the price of Bitcoin stays at $6,500. Is this not a screaming buy? Is it not like a volcano brewing underneath that's about to explode?
I mean, certainly as someone who has pivoted their career to focus 100% on crypto, I'm clearly very bullish on the space. I think the reality is that, yes, I think this is all building positive momentum later on. I can point to several other catalysts that I think will help drive momentum. But, there's been a lot of false starts as it relates to this institutional narrative. And so I think the market's going to be hesitant or patient until these people actually start coming to market. We were chatting about Fidelity a couple days ago here. And, they're going to introduce a lot of, would-be buyers that right now don't even know that they're the incremental buyer, right? They're still, it's not available on the platform. They haven't been educated yet, but it's going to open up. And I think they have something like 27 million customers I read that Fidelity has. That's, even if it's a small portion of that, right, a fraction, that's a huge incremental buyer into this market. So, yeah, I think that's coming. I think that's inevitable. It's going to take some time. I think the other element that we have to work through is there are, there's been a lot of news about Tether, say, this last weekend, and there's still a lot of unregulated exchanges in the space. There's a lot of valuations and projects that are very questionable. So I think some of that still has to be flushed through. But if you're looking at just Bitcoin and kind of the broader narrative around where this technology is going, I think it's no question that this is extremely positive. But unfortunately have to wait until they start onboarding actual clients, which I think this morning they or either they or Novogratz announced that they're going to be their first custody client. But that's, again, just an announcement. It's going to take some time before they really start onboarding the more traditional institutions who aren't already all into crypto, as we know, some of these firms are.
So, well, Fidelity is the first big name to go into custody. Up until now, we've had Coinbase, we've had BitGo, but now we have a real name in traditional finance actually going into digital custodian. Is that significant?
Absolutely. I mean, there's Coinbase has done a great job in the space, but it's still a relatively small portion of the market. It means, probably an order of magnitude more to have a very traditional player come in who already has a massive client base that doesn't have exposure to crypto. Furthermore, there's a sense of trust and familiarity for, traditional institutions. Like Fidelity's been around for 70 plus years. They have, again, a huge institutional client base, and it's a much easier kind of path for those institutions to turn on the switch and start working with a Fidelity than it is for them to, work with, someone like Coinbase, who, again, is near and dear to my heart. They're here in San Francisco. We know them well, but it's a different, value proposition currently because you have, startup from Silicon Valley versus a very traditional, Wall Street firm. That's not to say that Coinbase won't make inroads. That's not to say they're not going to be extremely competitive. But I think, again, the perception's different, and there's people who are very familiar with Fidelity already. That makes it easier. Furthermore, they've hired, I think, Tom Jessup, to head that group. He worked at Goldman for 17 years, did a small stint at Chain, and then now at Fidelity. I mean, he comes with a Rolodex, and connections that, again, make it easier to onboard a lot of these more traditional players. So I think it's hugely relevant that they're entering the space.
So, Will, as an institutional investment manager yourself, would you put your tokens into Coinbase or into Fidelity?
That's a good question. I mean, there's a few different answers to that. One, we're always going to have multiple custodians, and so we'll evaluate all the options. I think two, Coinbase does have a head up on being a crypto native firm, and what I mean by that is that there's dynamics to custody of crypto assets that don't exist in traditional assets, right? So some of these protocols require staking. Some of these protocols, you need to engage in governance. You need to be able to vote, and there's a long list of different protocols. There's not just Bitcoin, and so I think Coinbase clearly has a huge lead as it relates to providing a custody service that kind of is all encompassing for the underlying asset class. On the flip side, of the $200 billion market cap, 100 billion is Bitcoin. And so, that's a huge chunk of the market. And to be frank, like while we're very focused on this asset class and investing a lot of different protocols and future applications, the first traditional institution that comes into the space is not going to be doing that. They're going to be buying Bitcoin, potentially a few others in the top 10, but I would say it's going to be largely dominated by Bitcoin, and Fidelity will be able to check that box quite easily because these other crypto native concerns, don't exist for Bitcoin, given it's design. So, given our own strategies, we're going to have multiple custodians. This crypto native expertise is going to matter. For the broader institutional market out of the gate, probably matters less, and that kind of gives the Fidelities of the world an edge.
Nouriel Roubini, or Dr. Doom as he's known in his circles, fired shots at the crypto community once again. Only this time, he fired the shots in his testimony in front of Congress. During his testimony, he started off by calling himself an expert of global economy, of assets, credit bubbles, and of financial crises, and then proceeded to bash crypto in a bashing unlike one we've ever seen before.
My name is Neuner. I'm a professor of economics at New York University. I'm an expert of the global economy, of asset and credit bubbles, and of financial crises. In summary, my view on this ecosystem are as follows. First, crypto is the mother or father of all scams and bubbles, a bubble that has finally gone bust this year. Second, blockchain is the most overhyped technology ever, and is no better than a glorified database. Let me elaborate on these points. First, a recent study shows that 81% of all ICOs were scams to begin with, 11% of them have been failing or are dead, and only 8% are still traded on exchanges. Second, after a massive bubble in 2017, Bitcoin has fallen by 70% this year. Other major cryptocurrencies have fallen by 80%, and thousands of other ones have fallen by 95%. This entire asset class is literally imploding now. Just yesterday, major cryptocurrencies plunged another 10% in a day. Third, these assets are not currencies. Calling them cryptocurrencies, nonsense. They're not a unit of account. They're not a means of payment. They're not a stable store of value. Bitcoin can do only 5 transactions per second. Visa can do 25,000 per second.
And if that wasn't enough, he went on to highlight that, get this, nobody uses Bitcoin except for criminals and terrorists. I guess that means that if you're watching the show, you fall into one of those categories. That crypto is an environmental disaster. That crypto was in fact very centralized, and that there was massive price manipulation in crypto. Listen to this.
Nobody's using Bitcoin for transactions apart from criminals and terrorists. Crypto mining is also an environmental disaster as the system wastes massive amounts of energy. Fourth, there is a revolution in financial services, but it has nothing to do with blockchain or crypto. It is called fintech and is based on a combination of AI, big data, and Internet of Things. And it's already being used daily by billions of people for billions of financial transactions. There is no blockchain in fintech. Fifth, the crypto ideological utopia is a libertarian dream of full decentralization of all human transactions. No governments, no central banks, no corporation, no banks, no trusted institutions. It's totally utter nonsense. Sixth, crypto land is now subject to the opposite and dangerous trend, massive centralization. Mining is centralized and controlled by oligopolies in authoritarian countries like China and Russia. Trading is centralized as 99% of all transactions occur on non-secure centralized exchanges that are being hacked on a daily basis. Development is centralized as a technological elite is police, prosecutor, and judge. They arbitrarily change the code and fork coins into new ones when things go wrong. And wealth is massively concentrated in crypto land. The Gini coefficient of inequality for Bitcoin is worse than North Korea. It's quite an achievement. Seventh, there is massive price manipulation in crypto land, widespread pump and dump schemes, spoofing, wash trading, insider trading, coins like Tether that are created by fiat and used to manipulate upward prices. Massive criminality.
Now, whereas some of his testimony doesn't sound that far-fetched, Nouriel Roubini is the only man who managed to unite the crypto community. Joining me on the line from Dallas is Lou Kerner, who wrote an article this week called The 10 Stupidest Things that Nouriel Roubini said in his testimony to the US Senate Committee on Banking. Lou, great to have you back on Crypto Trader. Lou, Nouriel Roubini had some not so nice things to say about crypto this week in front of Congress. Who is Nouriel Roubini and why is he so important?
Well, Nouriel is called Dr. Doom because the world is always coming to an end. Everything is always a scam. He rose to fame as kind of a global economist for calling the 2008 financial implosion. But he's been saying he's been saying that the world's going to end for years. He's been writing that single call for 10 years, and now he's starting to rip on crypto.
So Lou, are you saying that he's not only negative about crypto, but he's the kind of guy that's negative about everything?
He's negative about everything, and almost everyone he talks about, he rips to shreds.
So Nouriel Roubini is just one of those grumpy guys that's negative about everything, but now he has his sights set on crypto. In his testimony, he did give some very valid points around crypto, such as the fact that we haven't been able to scale and that mining was very centralized. Was any of his criticism actually accurate and valid?
I think the vast majority of it was highly inaccurate. Whether he's just ignorant about how crypto works or whether he was lying, nobody really knows. And the truth, nobody should really care because what he says is nonsense. I mean, he started, one of the things he said was, there's no need for thousands of currencies. Which shows that he doesn't really even understand that the vast majority of what we call cryptocurrencies aren't really currencies. They're much more like frequent flyer miles. There are a small number of cryptocurrencies that are actually trying to be currencies. But to think that they're all trying to be currencies is just stupid and ignorant. And it's the most shocking thing to me is not that he's ignorant about crypto. The most shocking thing is that Congress, the U.S. Congress, actually brings him in as an expert for crypto, and that he actually holds himself out to be an expert in crypto when his knowledge is so lacking that it's laughable.
Now, what qualifications does he have? I mean, he seems to be a professor at NYU Stern. What are his other credentials?
He's a globally renowned economist. So he's been teaching at Stern in New York at NYU for a long time. He's on the cable channels all the time. He's been on CNBC countless times. So he's got a large profile. And I'm not even saying that he's stupid. Look, Warren Buffett is obviously brilliant. But that doesn't mean that he knows everything about everything. I wouldn't want Warren Buffett doing heart surgery on me. And Warren Buffett calling crypto rat poison, again, shows that Warren Buffett doesn't understand it. I don't think less of Warren for not understanding it, but I do think less of him for talking about something that he obviously knows nothing about. One of the other things that Roubini said, too, is that the 21 million cap on Bitcoin is a lie because of forks. So he doesn't even understand that when you fork something, it's not the same thing. It's now something different. So something as fundamental as not understanding forks is, again, just comical.
Lou, let's take a look at why Congress had these hearings. Why did we have these testimonies? What was the reason they called people like Roubini in to testify?
I think they're just trying to put crypto into context. They're trying to understand what the rules are, what the laws are that they should be passing, such that they protect investors but allow this new industry to flourish.
So Lou, you published an article citing 10 of the stupidest things Roubini said in his testimony. What other points can you floor him on?
Well, look, there were a number of things that he said that I thought were just ridiculous. I'm actually, if I get up the article in front of me right now, among the other things that I mentioned in the article, he said, look, this is the biggest bubble of all time, which is, look, we lost $700 billion in value, but that's less than 10% of what was lost in the financial crisis of 2008. It's less than the trillions of dollars that were lost in the crash of 29 when the dollar was, when the economy was so much less. So as far as all-time bubbles go, this isn't even anywhere close. And he talks about how, that you can't have a currency, a cryptocurrency, because nothing's backing it. And, which is, totally, utterly ridiculous. Nothing backs the U.S. dollar, right? And he said that, gold, the U.S. dollar fell 40% in one day in 35, and it's fallen versus gold since, It used to be able to get 50 ounces of gold I'm sorry, what's the exact thing? Used to be able to get 50 ounces of gold for $1,000. And now, 1 ounce of gold costs costs over $1,000. So the fact is that the dollar has been losing value to gold for, since its inception. And Bitcoin, again, is not going to get debased. We know how much it is. There are certainly problems with Bitcoin, right? I'm sure you recognize the problem. Everybody in crypto understands what the problems are. So we're not saying that we're perfect, but his arguments against crypto just show total ignorance.
Now, Lou, do you think that Nouriel did some real damage, and that when Congress does actually regulate, Nouriel's comments would have done some real long-term damage?
I think actually the biggest damage that's done, and this is kind of comical, but is all the time that's sucked up responding to it in crypto, right? This is just a waste of time. We're not really helping the crypto industry by this dialogue. It's fun to talk about. I actually wrote a post in the beginning of the year, my 7 crypto New Year's resolutions. And one of them is not to hate the haters. Because by hating the haters, again, we're just wasting time and energy. The fact that, Congress, my point is less to hate Nouriel Roubini, but just show that this is where we are, that this is who Congress actually thinks is an expert. To me, that's the bigger news here than anything what Nouriel Roubini said. Now, does that hurt the long-term crypto? Certainly, it muddies things in Congress. Very few people, if anyone, in Congress actually understands what crypto is. They're not going to learn by getting people, as you know, they're not going to learn by holding these congressional things. They need to actually go and study. We'll see if any of them actually do. But this is just a waste of everybody's time. This is just crypto theater.
Well, I guess the wasps will fly around while the bees make honey. Lou Kerner, it's been a great pleasure having you on Crypto Trader. We look forward to seeing you again. Doubts of Tether solvency, coupled with some dubious announcements from Bitfinex pausing fiat deposits and withdrawals, sent the markets into a spin once again this week. As news broke of HSBC terminating its proxy banking relationship with Bitfinex, investors began to exit Tether and move back into crypto. At one point, the supposedly backed USD fiat token traded at 91 cents to the dollar. Investors moved into Bitcoin, sending the Bitcoin price up as high as 7,500 on some Tether traded exchanges. The rumors died down as the news broke that Bitfinex had apparently changed its banking partners and had a new banking partner in Hong Kong. At the same time, Bitfinex resumed deposits, but this time with a very suspicious notice on its website reading, "This banking information is provided for you for the purpose of contributing in good faith to funding your account on Bitfinex. At all times, you are subject to the terms and conditions of our service. The banking information is commercially sensitive and confidential. You should be very careful with this information. You are asked to keep this information to yourself and not to share it with anyone except your financial institution. Divulging this information could damage not just yourself, Bitfinex, but the entire digital token ecosystem. Accordingly, you are cautioned that there may be serious negative effects associated with this information becoming public." So I guess that means that you shouldn't share this information that we've just broadcast. Please don't share this video. There could be huge implications to the entire digital ecosystem. So I guess this means that you shouldn't share this information that we just broadcast. Please don't share this video. There could be huge implications to the entire digital token ecosystem. I repeat, do not share this video, do not subscribe, and do not like. Joining me on the line again is Yaniv Feldman to talk about this. Yaniv, Bitfinex and Tether in the news again and rocking the market.
Yeah.
What actually happened?
So the rumors about that Tether started at the end of September when one of their supposed custodial banks, the reserve banks, Noble Bank, said that it was difficulties in liquidity. Ever since then, there were a lot of rumors going around. What's Tether going to do? They switched to HSBC, and then their account got closed up again. And then Bitfinex, the exchange that behind Tether or collaborating with Tether, also had banking issues, which also increased the rumors and especially the mistrust in both entities. And what that caused is basically not the first time, but the biggest spread of them all, where Tether value and dollar value just gets separated. You'd see at the top, I think Tether was 0.91 of the value of a US dollar. And what you're seeing right now, it still goes on, at the moment, even though Tether is back to 9.6 or 9.7 right now, you're seeing a huge spread in Bitcoin price, where in exchanges that list Bitcoin on US dollar, it trades around 6,400, 6,450. And in exchanges that trade on Tether, it ranges between 6,550, 6,600, and even more. So the spread keeps on changing. At the peak, it was $580 spread between, the different assets. And that's supposed to be a stable coin. So it basically lost its peg. And the interesting thing is that other stable coins, the new alternatives that came in on the market, also lost their peg, but on the other way, meaning that, people were looking for alternatives to Tether. Everyone were trying to, throw it away, fearing that they won't be able to later. So the one of the first places they went on looking was other stable coins. And you saw new exchanges like Huobi and Kucoin listing all the 4 new stable coins like TUSD, GUSD, USDC, and PAX. And you saw that their value went above $1. Some of them even got to 1.2 at the top. So it's very interesting to see. We did see a close of the spread once Bitfinex came back with deposits and withdrawals. But let's say that the boat is shaky, and right now when we have alternatives, things are not looking really well for Tether.
Do you think that Tether may have caused its own demise by not being transparent?
I think, once it was, on its own and we didn't have any alternatives, it doesn't matter whether you're transparent or not. You're just the only one in the market. You're a monopoly. But once you have an alternative, you need to have a good enough reason to switch. And if the reason is good enough, which is mistrust, and the switching cost is relatively, small, so, I don't see any reason why it would stay. They still control like 99% or 98% of the stablecoin trading volume, but I don't think it'll last for a long time.
Yaniv, ironically, the market went up when these rumors broke as people fled from Tether back into digital assets. Do you think that in a strange way, the rumors of the demise of Tether may have been a catalyst for the market to go up?
So for that, I have like a short-term, medium-term, and long-term assumption. Where in the short term, people who want to dispose of Tether, the easiest way to do that is sell Tether to Bitcoin, which would cause Bitcoin to go up. In the medium term, people might lose trust in the industry because of Tether and stuff like that, which might cause the price to go back down and maybe even a little more down than it was to begin with. But long run, and when I'm saying long run, it's 3 to 6 months. People, will have a better alternative, and once Tether won't be such a big chunk of the trading volume, and they'll have much more transparent and regulated alternatives, I think it's pretty much the best thing that can happen for the crypto industry. I think that Tether going down with the other stables coins going up to replace it is what's going to allow better exchange settlement between exchanges, and even the approval of EDF. I think that's something that's going to increase market liquidity and decrease the ability to manipulate the market, and definitely going to be a good thing long run.
Amazon announced this week that its web services division will be partnering with Qtum blockchain to provide easy-to-implement blockchain-as-a-service solutions to its enterprise clients. Qtum, now in the top 30 currencies, will allow Amazon clients to implement and launch smart contracts quickly and effectively. From Colombia, I've got Miguel Palencia. Miguel, you broke the news of a partnership with Amazon. Before we get into the news, what is Qtum?
Quantum is a hybrid blockchain smart contracts platform. 2-3 years ago, we decided to build up a new platform that was a combination of the UTXO model from Bitcoin along with a modified version of the smart contract layer from Ethereum, which is called the EVM. So the idea behind this was to build a new platform that was able to have the stability of Bitcoin, security from Bitcoin, along with the flexibility of the smart contracts that were already available on the EVM. Now this opened a new window for us and for the entire blockchain industry, because it allowed us to create something that was more flexible and more scalable over the future. Right now, Quantum is already working into building our own smart contracts virtual machine, which is called the x86 VM. Now, this is a real game changer because it will allow for anyone who knows how to develop for C, C++, or even Rust to build and run smart contracts on blockchain. So now it's not just going to be limited to anyone who's using Solidity, which is, is a basic language, but which allows for smart contracts. But this is going to offer more powerful applications on blockchain.
Okay, now is the Qtum mainnet actually live?
Yeah, Quantum has been live since September 2017. Mainnet has been running perfectly for over 1 year, and we have more than 6,000 servers around the world are running Quantum, and most of them are run by the community, so that's really great. The foundation only runs about 20 servers.
So if the mainnet is live, is anyone actually using Qtum?
Oh yes, there's way over at least 100,000 unique users. We know that there's over 1 million Quantum addresses around the world, and there's many dApps. Those dApps are called decentralized applications. There are different companies and different projects that are running on Quantum.
What are some of the biggest applications on Qtum?
There's some really big applications. There's one that's really cool, and it's starting to get some good traction, which is called VView. VView is you can think of it like a decentralized YouTube. So users can upload videos and of any kind to VView, and this will generate revenue based on how many views they get, if it's a paid video, and everything is stored and running on a combination of Amazon Web Services and Quantum blockchain.
So let's talk about the big news that you're announcing on the show, the partnership with Amazon Web Services. Tell us more about that.
Yeah. Recently, we signed a partnership with Amazon, and we're really happy for this. Amazon is the biggest cloud provider in the world, and we started out signing a partnership with them into expanding our offerings and use cases, trying to find more use cases on blockchain along with Amazon Web Services. So the idea for this is not just having this offer that we have for end users and developers, but we want to expand towards building up a new cloud infrastructure with Amazon for the enterprise. So I think this is really cool.
Now, the word partnership is very often abused in this industry. Can you be more specific as to what exactly this partnership is?
Yes, we're going to work together with Amazon into creating a new offer that's going to be like a blockchain as a service. And this new offer will be available for anyone, but it will be more useful for the enterprise. So this new offer will allow anyone who can just get on Amazon, get on a computer, and they can start building their own blockchain using a web assistant. So this web assistant will actually cover many different needs and many different use cases, I believe, because it will be pretty much like a few clicks, and you will have your own blockchain with your own set of nodes, your own set of parameters that you want in a matter of few minutes, and this will save thousands of dollars for anyone who wants to get started on blockchain. So the idea is not just to build this offer and just leave it there, but we're going to work together with Amazon to try to get this out there to Amazon's customers and to anyone who wants to get into blockchain, to bring them to Amazon and work together with us and them.
Now, Miguel, does this send a strong message from Amazon that they are serious about getting into blockchain?
Oh, yes, absolutely. This is more than just a pat in the back from Amazon to the entire blockchain industry. This is Amazon saying, hey, this is big and we're going to make this grow with us. So yeah, I mean, Amazon being as big as they are, getting into blockchain, I think it's wonderful news for everyone who's into the blockchain industry.
Coinbase announced that it would be launching 0x as the first ERC20 token to trade on its platform. And it seems that not everyone was in the dark about the imminent launch, as the price of 0x climbed steadily for a week leading up to the announcement. The announcement was made on the 11th of October. The chart shows that the first 0x pump happened about 4 days before the announcement, when the token went from 65 cents to 75 cents. It then took a breather, and the price of 0x went on another run as the asset started to trade on October 16th. So is this the time to sell 0x or buy 0x now that the token is listed on Coinbase? When it comes to these kind of questions, I ask our expert trader, Luke Martin. Luke, we had a huge run on 0x both before the announcement and at the start of trading. Is there still a buying opportunity here?
You know, if you want to get long ZRX, to me personally, I think that opportunity is past. I would either want to be positioned before, not after. If you look at the chart, we've already seen 2 subsequent pumps. So there was a move when it was announced on Coinbase Pro. There's also a move when it was announced on Coinbase.com. If you look at how much it's up now, pretty much in the past week, it's up almost 40-50% against Bitcoin. Compare that to the rest of the alt market. That's one of the biggest movers in the space. You know, coins jumping 20, 30, 40%. I would much rather be positioned elsewhere in some other alt or in another speculative Coinbase ad.
Now, Luke, we saw a spike 4 days before the announcement of the imminent listing. Do you think that information was leaked?
You know, it's tough to say, and it's also tough, even if they didn't want to leak or purposely leak that information, there's always going to be people kind of speculating on that ad, or maybe a rumor gets out and people are buying that rumor. With previous ads, whether it's on Binance or on Coinbase, I have seen kind of worse activity leading into an official announcement. I didn't think this one was that bad. You know, I think it'd be hard to separate what is people speculating that it could be added versus an actual leak.
So, Luke, you talk about investing in other alts again. Does that mean that you're bullish on alts again?
If we look at where alts are priced, and we also look, you know, I posted this on Twitter the other day, that alts have been trending up for about 30 days, and that maybe has some people in disbelief. A lot of people are used to alt season or an alt uptrend leading to 2x, 3x, 5x gains, these multiple gains, when in fact, if you look at where alts are relative to where they were a month ago, you know, early or mid-September, almost every single alt is up across the board. 80-90% of the alts are up across the board, right? So even though the gains have only been 20, 30, 40%, they are still rising with Bitcoin, which was down at 6,100 back a month ago. So correlation is still there. If you are bullish Bitcoin, which I am, you know, I want to be positioned or at least exposed in alts. I don't think it's a totally risk-on environment where I'm all into alts, but I do like exposure to alts right now, and I want to kind of ride that trend.
Okay, now the big question right now is, which alts would you be investing in?
Yeah, so now that we kind of have it cemented, I don't want to be on ZRX, already looking that it's up 40-50%. If we look at what the biggest movers are in the past month, you know, if you're thinking top 200 market cap coins, most of the biggest gainers are 40-50%. I think that opportunity is past. If you are looking for a play or for an angle, you know, looking at how these Coinbase ads have done, if it's just a trade, looking at some of the other speculative ads, whether it's Stellar Lumens, whether it's Cardano, whether it's Basic Attention Token, those coins they announced a while back that they were thinking about adding, I think those are smarter plays. Also looking at mid cap. So it looks like the money is kind of already rotated out of large caps and is attacking other coins like, you know, Icon or Zilliquet. Coins that are a little bit lower down, maybe that top 20, they're starting to get fresh money, and we're starting to see those things move.
Now, Luke, you took a real flyer this month and traded against Coinbase. And you made a packet doing it. Tell us about the trade.
Yeah, you know, I don't want to add insult to injury. I actually respect that he came forth and made that position public and showed that. I think that's a lot more than what other traders do. But yeah, I am bullish Bitcoin, even though that support has been tested multiple times, and support should get weaker each time it's tested. People point to that descending triangle. Low 6Ks this year. You know, even if you're expecting them to break, I wouldn't want to be shorting at low 6Ks. Just my outlook on Bitcoin, all the fundamental things that are happening, Fidelity stepping into the space, that's not an area that I want to be short. You know, if it breaks, then sure, maybe play a scalp short. But, you know, I'm long from 63 or 6,200 December futures, and I want to ride that out. So yeah, it just worked out like that. I'm not going against Coinbase specifically, right? It's not a one-on-one market, but yes, I am positioned long on Bitcoin.
That's all the time we have for tonight. Next week, I'll be broadcasting from the Crypto Invest Summit in Los Angeles. If you want to join me there, go follow me on Twitter and find the link, because I'm giving away some free tickets. Until next week, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.